Welcome back. You're listening to the panel discussion, the CFO Agenda, sponsored by Ernst & Young on Federal News Radio 1500 AM and federalnewsradio.com. I'm your moderator, Jason Miller. Our guests today are Charlie Cook, the Department of Navy's Principal Deputy Assistant Secretary in the Office of Financial Management and Comptroller, James Watkins, the Department of Army's Deputy Assistant Secretary for Audit Readiness, Doug Bennett, the Department of the Air Force's Deputy Assistant Secretary for Financial Operations in the Office of Assistant Secretary for Financial Management and Comptroller, and Joe Quinn, a Senior Manager in the Advisory Services Practice of Ernst & Young. So, gentlemen, before break, we just got done listening to Doug a little bit about where the Air Force is. So I'm going to go back to Doug and say, okay, priorities. You're down a path. That's a good path, it seems like. You seem positive. You seem optimistic. What's your short term? So I guess by the September. And what's your longer term priorities?
Sure. For the short term, getting ready for our SBA in 2014, 2015, we're looking at doing process controls. We've got the system that we have right now, and we can't change that in the next 6 or 8 months, but we're working on that long term. But in the short term, it's fixing process controls. It's putting in standard document numbers so that we can do reconciliations between our different systems. We've got about 51 different systems that impact our schedule of budgetary activity, and so reconciling all among those as files flow back and forth, reconciling those is imperative. So those are kind of the short term, those are process controls. We're also looking at communication with the field, getting them trained up and ready for an audit so they know how to respond when you just come asking for information, how to get the right information to them quickly and appropriately so that it answers those questions. So those are my short-term goals. Long-term, we're looking at getting DEAMS deployed, which is a Defense Enterprise Account Management System, which is our system comparable to the Army GFIBs. And we've had some recent success with that. We finished deployment of that system throughout Air Mobility Command, and we're seeing about $5 billion a year in general funds flow through that every year. And we're getting ready to deploy to Air Force Global Strike and most of Air Combat Command on October 1. And by this time next year, we'll have about 60 or 70 bases operating the system as we go out. That includes the Guard locations. And that's going to give us our general ledger capability that Jim referred to. That's so critical for our long-term audit readiness.
So one question I want to go back to, because DEAMS is obviously, for all intents and purposes, an ERP system. We'll push that to the side for a second. But you mentioned getting people trained and ready for the audit. From a workforce perspective, how heavy of a lift is that for any of you? I mean, I'll throw it to the whole panel, but just starting with Doug.
Sure. You know, in the Air Force, we've got about 9,000 people that are covered by FM certification, and they're dispersed at our 70-plus bases across the U.S. And the world. And just informing them on what's expected of an audit and the timelines is critical. One of the things that our team has done is we implemented monthly testing where we go on end-to-end processes and we ask the field to submit documentation supporting certain transactions, so mill pay, asking, can you prove to me that you've got this full population of military members at your base, that's in your payroll file. Civilian pay, do you have time and attendance cards, and you're properly certifying, all those issues. So we're testing those every month, and that's educating the field on what we expect an auditor ask and the timelines. And so that's kind of our mechanism, getting them used to that. And then the FM certification that Mr. Hale implemented, there are fire training requirements out there, so people are learning about that in the system. So we're communicating with them. We're using the certification. We're using periodic testing to get them ready.
All right, let me turn to Charlie or Jim. Jim?
Yes. I share the same views that Doug shares, that he's articulated. But in the case of the Army, we have approximately 15,000 staff associated with financial management across the globe. And since audit readiness is more than just resource managers or financial managers, it includes all the logisticians, personnel folks, anyone that has any kind of a business transaction that has a financial impact is involved with audit readiness efforts. So this is not a financial management effort alone. For example, if we have a soldier that gets paid, it has a financial management impact. If we have a civilian who gets paid, that's a financial management impact. If we have a piece of equipment that's transferred from one battalion to another battalion, that's a transaction that we have to reflect on the records of where the equipment's located. And so those all have financial impacts. And so we're doing training. We've been doing training, and we've had 25,000 people trained in the last 2 years on the impacts of audit readiness. This is beyond just the resource managers, and this is beyond the training that is required under this FM certification program that's Mr. Hale started at OSD. Now, you asked a question of Doug about the long-term and short-term. Training is one aspect of it, but the short-term, we have the 2014 requirement, which we've already discussed, but the Army's been working on the long-term all along because we couldn't wait until 2015 to begin working on the 2017 requirements. So, for example, the balance sheet, it has our assets listed, such as plant, property, and equipment, our cash. It has our liabilities, for example, environmental liabilities, where we have depots or we have petroleum, oil, and lubricant stations where there's some spillage and there's some environmental damage. So there's liabilities there. And we've been working on environmental liabilities. We've been working on our cash, fund balance with Treasury, we call it. And we've been working on our plant, property, and equipment. That includes real estate, operating materials and supplies, general equipment, fire trucks, general equipment, tanks, all of those things. So that's all related to the general fund that we talked about. But there's another whole side of the Army that's much more complex, and that's our industrial operations and our supply chain, which we refer to as the Army Working Capital Fund. So we have this other agency, Army Materiel Command, that supervises the industrial operations if we need equipment. Because if the Army needs equipment, they need supplies. So they've got the industrial operations going, they got the supply operations going, and those statements in the Working Capital Fund have to be ready also. So we're working on those statements now in addition to the general fund statement.
And in many ways, the Working Capital Fund is more like a traditional private sector accounting take, or because I know it's different because it's government. Let's start there. And maybe this is a question for I throw at Joe real quick as a little bit of a curveball. But Working Capital Fund, is it more similar to what the private sector does?
It's more similar, certainly, to a private sector entity because their goal is to recapture their costs through getting revenue from their customers. So they have to be able to account clearly for what they're spending to deliver services and goods to their customers. So you're right.
And then let me go right back to Jim real quick. Does that make things more difficult because it's a different approach to accounting, or is it all this very similar?
Well, the level of difficulty is similar. It's just a different type of operation. As Joe mentioned, the Working Capital Fund, if I'm supplying tanks and I sell a tank to an armor battalion, I need to get reimbursed for that tank. And then there's also an overhead cost of having the infrastructure to deliver that tank. That very simple terms. I mean, it's much more complex than that. But
if it was only that simple, right?
If it was only that simple.
Wait
right.
a minute. I'm delivering you my tank. That's $17 million. I'll write you a check, and we're done.
Right.
It should work that way.
Well, take another example, a helicopter. When the helicopter is manufactured and we pick up the helicopter, we send a crew out to where it was manufactured. The helicopter has to be flown to another station where they outfit it with the other additional avionics, signaling, a whole host of other things. Another example would be our MRAPs, mine-resistant armor personnel, anti-personnel vehicles that we use overseas. Those are configured in 17 different ways. We have some MRAPs that are configured for retrieval of wounded from the battlefield. You have some that are command posts. You have some that are for, you put a squad in there and use them for fighting. There's a number of different configurations. So all that complexity has to be captured in the accounting records.
We turn to Charlie from the Navy.
Okay. Yeah, I'd like to clarify something here. The biggest challenge we've all had across the workspace here is the either basic level of ignorance or the misperception that the financial audit is a green eye shade exercise. That's a challenge we've had in getting it across to the operational forces, to everyone to understand that they have a role to play in this. About 10 years ago, the Government Accountability Office published a study that basically said 80% of the information on the financial statements comes from non-financial feeder systems. To me, that was kind of the wake-up call that pushed us to comptrollership. Resource management is so decentralized across DoD that it has to be a full team sport. And that's been the largest hurdle we've all had to overcome the last few years, and we've all made significant strides in that regard. To kind of use a graphic example that Jim was using, again, take Special Operation Forces. Okay, so some soft individual out in the mountains of Afghanistan pulls a trigger, and a 15-cent round goes downrange about 1,000 yards. That's a financial transaction that ultimately works its way back to the balance sheet, the scheduled budgetary activity. That's the fact of the matter. We're in 24 different time zones, and any soldier, sailor, airman, or Marine wakes up in the morning and starts breathing, okay, we owe him a paycheck. I mean, that's a financial transaction going on.
And if unfortunately he doesn't breathe, you owe somebody else a paycheck.
Well, yeah, exactly. There is.
That's a whole different discussion.
The education process really has been to our contracts directorates, our acquisition professionals, the logisticians, getting them to understand that they have connectivity back to the financial statement, because as Joe well knows in both his prior life as part of the fire team and currently, the auditor starts the financial statements and very quickly goes past the comptroller into those business organizations where things are happening, because they're looking for confidence of what's going on. We in the comptroller could have confidence in what we're doing, and it could be exactly right because we have systems such as GFEBs or whatever. Our controls are there. But if it's the wild, wild west out there of enterprising logisticians or whatever they're doing, and we all have our own horror stories about fraudulent contracts, things like that, then we're going to fail the audit when that comes. Now, relative to 2014, 2017, I think when the question started out when we came back from break, to quote Donald Rumsfeld, we're going to audit with where we are right now. There's going to be no big bang between now and December, January, February, whenever the FY15 contracts are awarded. So, and we are at the point where the game is about to change. What DoD has done over the last 5, 6, 7 years, through the FIRE approach, and it's neither good nor bad, it's the segment approach. We've had to do that to demonstrate to ourselves and to the outside world we know we can now command and control parts of the financial statements, part of the business processes. The game is going to change significantly when the contracts are awarded. What the IPA will come in, the first thing he will ask is, can you tie out your universe? Can everything add across and down? That's where the Marine Corps failed the first year and almost the second year. They got their disclaimers for the audit. They don't care about the segments necessarily. Now, once we can prove we control the universe, then the IPA and the DoDIG, whoever's looking at our books, will start delving into and boring into the business practices in themselves, the segments, whether it's reimbursable work orders or the mill pay, as Doug mentioned. There's a significant shift going on that is going to cause us all moments of a white knuckle ride, if you will, as we go forward. But that's where we are. I mean, that's part of the process to get there. It will demand much of us. It will ask us to do things we have not done before in this journey, but it will make us stronger and better for it. And ultimately, again, once the financial statements prove out and it says, you are good to go, Army, Navy, Air Force, Marines, whoever. Your data, we are confident in your data, that it's reasonable, that it's accurate. From there, we can then step forward and say, now we can use this information, which is the ultimate goal.
And absolutely, it's the ultimate goal. Let me turn to Joe real quick. You're hearing a lot of hope, a lot of plans, control your universe and white knuckle. Is that typical what you hear from other folks who've gone through this?
Yeah, sure. I mean, getting to where these folks have just described that they are has involved incredible changes within the department. Jim modestly mentioned implementing GFibs, but that's the largest SAP instance in the world. I mean, these were incredible changes that the DoD and the other federal agencies as well have made to improve the capability. Now what a lot of the clients are looking to do is sustain that. So, we're at a point here, even in the DoD, where they're essentially under audit. Jim and Doug mentioned outside auditors are examining them now in kind of trial run test audits to help the people understand what they need to do. The next step, in my view, is to sustain the achievements that have been made. And part of that comes from actually using this information. And that's what our clients are excited about doing. It's making that transformational change to actually use this improved financial information to understand really what do things cost. And by things, I don't mean individual assets like a satellite, but rather satellite communications. So there's a lot that goes into providing robust communications anywhere in the globe all the time. It involves a lot of people, probably thousands of people, hundreds or even thousands of different pieces of equipment. And understanding what those things cost and the performance that they deliver, that's what we're trying to help our clients do, to really capitalize on this foundation that's been built of financial accounting and financial systems. So with that, they can really start to understand what value and what programs and what projects are more productive over time and direct resources to those that deliver the most value to the organization.
All right, that's a great segue. You led me into our third section perfectly. We're going to take a quick break. You're listening to the panel discussion, the CFO Agenda, sponsored by Ernst & Young on Federal News Radio 1500 AM and federalnewsradio.com.